I'm going to start off the weekend report by looking at the weekly charts. So this is the S&P. We're going to be 17 weeks into the intermediate cycle. This doesn't necessarily look like or give me any indication that we've got a top here, but 17 weeks, I think at some point you just have to be satisfied with your gains, get out, wait for the next intermediate cycle low. So even though this doesn't really look like a top, for me anyway, I don't want to continue to push this. And of course, the really frightening chart here is the Nasdaq. This is the Nasdaq 100. This is just stretched way too far above the 200-week moving average for my taste. If I was in this trade, I would be selling here. I think it's too early for a blow-off bubble phase. Maybe not. Maybe this is starting to predict a Republican sweep in the election. If that's the case, then maybe we could get a bubble over the next year. And so, I guess it's possible that this is possibly anticipating a Republican sweep in the elections. But for my taste, just too much white space between price here and this 200-week moving average. So again, I think you just have to control greed and be happy with your gains at some point. This is the banking index, and this is a problem. Other long-term secular bull markets have ended like this, where the banks are diverging, and the banks have been since the beginning of 2018. They did not make a higher high in 2019, and they are lagging the rest of the market badly. So this is a warning sign in my opinion. I want to be careful trading the stock market at this point. Another kind of sort of warning sign here that the transports are also lagging. They also did not make a higher high in 2019 above their 2018 high, and they're lagging pretty badly here as the Nasdaq makes new highs, and they're lagging the S&P as well. So another warning sign that I think it telling you that you just want to be happy at some point and take your profits and wait for the next intermediate cycle low before we trade the stock market anymore. And then looking at the dollar, and this might pertain to gold. This is an extremely left translated cycle. It should drop below this low. Of course, the ECB is going to try and prevent that from happening, but they were not able to prevent the dollar from closing below the 200-week moving average this week. So a sign of weakness in the dollar that it's possible that the ECB may not be able to push the euro back down and push the dollar up anymore. This intermediate cycle may finish and naturally, and if it does, then it should move below this low. And I would think that if that happens, especially let's say Monday, if we were to break this daily cycle low here, I think we would very quickly come down to test the March low right here, and then we should break it, considering that this is a left translated intermediate cycle. I don't know that we're going to get a whole lot of follow through below this, but I think the next intermediate cycle will also be extremely left translated. And that cycle, I think a lot of damage is going to happen to the dollar. So, a sign here that the currencies are maybe fighting off the attempts to manipulate the currencies. And I think the pull of the 3-year cycle low may now be too strong for the ECB to turn the currencies back around artificially. All right, now let's get into the metals market. We've got a slight breakout here in gold above that 1800 resistance zone. There really isn't a whole lot of resistance between here and we could take the weekly closing high is about 1887. The all-time high was about 1920 something. I would say we've got a pretty good shot, especially if the dollar continues down and completes a natural intermediate cycle low, for gold to come up and maybe at least test this 1887 to 1890-ish level here. Maybe it goes through there and tests the all-time highs. My expectation is that we're going to get some kind of test of this, and then we're going to get the handle of this. This looks like a pretty nicely formed cup, and then we'll get a handle sideways consolidation before a breakout. So my thinking at this point is that the banks are probably in trouble, and I think gold is probably got some more upside for a couple more weeks. And the FOMC meeting is on the 29th. That is a prime trigger event for the dollar to bottom and for the metals and maybe the stock market as well to top and start their moves down into intermediate cycle lows for metals and stocks, and for an intermediate degree advance in the dollar, which I think will not last very long, maybe 4 to 5 weeks, 6 weeks tops, and then I think the dollar rolls over in another left translated pattern, and we get a really sharp, extreme move down into the 3-year cycle low that would presumably would bottom in sometime in the spring of 2021. All right, so for silver, what I wanted to see was, I really wanted to see silver break this second resistance zone and do it quickly, and it's trying to do that. If Monday we come in and we get a big percentage move Monday, something that blasts through $20, maybe we're getting close to 2050 or even getting close to this 2021. If that happens, then I think we're going to go through 21. If not, if we have to churn next week and we're trying to get above this resistance zone and we don't really break above that until maybe the end of the week or the next week after that, then I think this intermediate cycle is probably going to be capped at the baby bull high. I don't think it's going to go through it. If we can get through this very quickly Monday morning, then I think we have a chance to get that euphoria phase that typically ends an intermediate advance, and that might be strong enough to just blast right through these baby bull highs, and we could get a really extreme move that could take us anywhere to anywhere from $23 to $25, $26 before this is over. That's kind of a long shot event though, and it's going to absolutely depend on whether or not silver can break through this. It really needs to do it Monday, and very quickly test the baby bull highs. And if it does that and gold gives us a rally to $1,880 to $1,900, then I think silver has a chance to break through this. Otherwise, I think this intermediate cycle is probably going to be done at about this 2020 level or 2120 level on silver. But I think there's potential here. I like the potential here, and in the miners, I still think you should be unleveraged. We're getting in the last couple of weeks, maybe even the last 7 to 10 days of this rally. So you don't want to take a chance of getting caught with leverage and then ended up losing all of your gains. So for the vast majority of people, unless you're just willing to take a complete loss if you mistime the top, I still think that you're best being unleveraged. And then at the next intermediate cycle low, that's when we can put the pedal to the metal and swing for the fences. And I think the next intermediate cycle in gold is going to be a doozy, and it should correspond with the dollar moving down into maybe a final 3-year cycle low. And then finally, the miners, they're pushing up into this resistance zone here. We've got one at about $39. We're marginally above that. This second support zone here, right around 40.50 to 40.60, something like that, would be another resistance zone. So again, this may depend on if we can very quickly go through this Monday morning. If we get a big move up in gold, maybe Monday morning, then the miners might slice right through this. and we could get somewhere in the $45 to even $50 range before this intermediate cycle tops as some kind of euphoria blow off phase. But we're starting to get stretched pretty far above this 200 moving average. So we're getting late in the cycle. I don't think it's a good idea to be heavily leveraged in minors here. Just again, try and get a base hit or a double. We'll get very heavily leveraged at the next intermediate cycle low. And I think that's where we can make a lot of money. Right now, let's be a little cautious. Let's not lose money by being leveraged and possibly getting caught at the top. Even though I don't think we've got the top yet. I think we've got another week or two at least before this intermediate cycle tops. So I did a video on the blog this morning discussing what I kind of want to see that would indicate that we're getting into the final phase of an intermediate rally in gold, and usually that includes some big percentage moves in silver. We're not seeing that yet. We're struggling to get through these resistance zone. We're kind of getting bogged down here this week at this resistance zone. That's not what we would tend to see at a top. Usually we get this big 5 and 6, 7% moves. A sign that people they're afraid of missing out and they just want to get in at any price. That creates the kind of excessive bullish sentiment that then causes people to just hang on to their positions way too long and ride the entire intermediate correction down. We've seen this at other tops. Traders will predict that the intermediate cycle low is going to be over with quickly, and they have to buy soon after the move starts, and that is a sign of traders that have become overly confident, and they end up buying too soon during the intermediate decline, or they hold their long positions too long, and that's the kind of sentiment that drives the intermediate decline. I don't think we've got that kind of excessive bullish sentiment yet. I'm still seeing people quick to hedge, quick to sell on down days, and usually we have to completely wash out that kind of nervousness before we get an intermediate top, and then it usually takes 4 to 6 weeks to wash out that bullish sentiment and then create the conditions for the next intermediate rally. So again, I would stress, let's just try and get a single or a double here. Once we do get the intermediate correction and everybody starts to get bearish again, then that's where we'll try and swing for the fences. And I think everything's going to reverse. I think the stock market, which was very easy to trade this intermediate cycle, is going to become difficult as we head towards the elections. And I think the metals market will give us a much easier trading environment during this next intermediate cycle.